everyone, this is Rob Roy and welcome to the Elliott Wave Options U.S. Market Update. Well, Fed Chairman Powell gave his long-awaited speech from the Fed Symposium in Jackson Hole today. And forget being hawkish, Chairman Powell went all Peregrine Falcon on us with comments like they expect to use their tools forcefully to combat inflation, and the continuation of raising rates is likely going to cause some pain to the U.S. economy. Yikes! Well, with that, as you would expect, the dollar went to the upside. But, perhaps unexpectedly, interest rates went down. Why would that be? Let's take a look at the charts. At the time of this recording, it is late on Friday evening, and the futures market is closed. Before we get to the charts, if you like these videos, please don't forget to hit that like button, or better yet, hit subscribe, and you'll be notified immediately when one of these videos is posted. We sincerely appreciate it. All right, taking a look at the charts, as you know, today it was an ugly day. We had a big move to the downside following Chairman Powell's speech that was unusually hawkish for this Federal Reserve. I think it caught some people by surprise. We broke below the 50-day moving average. We take a look at the volume, and that was just above average volume. The fact that it wasn't a massive volume spike leaves it open for likely more downside to come. We had that wave 4 sit right at the 61.8% fib level. As you know, that's my favorite level. I think it's the strongest of all the Fibonacci levels, and that's a pretty good place to have a pivot point to start a new impulse move. So this move down in the wave 5 looks underway. The only question, I think, is do we try to rally back above that 50-day moving average first? It's hard for the bulls to hang their hat on anything that came out of that speech. It looks like it's going to be rough for some time now. We take a look at the VIX. We also talked about this in Tuesday night's TradeFinder. By the way, if you haven't attended a TradeFinder yet, please do so. You can register under this video or go to our website at ewotrader.com. It's free. We do it every Tuesday night at 9 p.m. Eastern Time. We talk the markets. We look for case study considerations, trade ideas, if you will. And we also have a live Q&A. And going back to this chart here, the question came up Tuesday night, what could cause this wave 5 to move to the downside? And so I responded with, well, there's black swans, right? Like who knows what's going to happen between China, Taiwan, etc. But my comments have been pretty consistent. I felt like the Fed holds the cards. Whatever the Federal Reserve does, if they start withdrawing liquidity as they've said they're going to do, while they're continuing to raise rates more aggressively than they expected, be a very difficult market for the market to move higher in, and that appears to be exactly what the Fed has in mind. We've been questioning, were they really withdrawing liquidity? It didn't look like they had started to do it yet, but it sounds like from Chairman Powell's speech today, it was no nonsense, 8 minutes in and out, very short speech for him, that is exactly what they intend to do. So where's the catalyst for the market to move higher from here? All right, so taking a look at the VIX, as I said, we talked about that Tuesday night as well, that we're probably going to get more of a move off of the 20 level. Just what we had wasn't enough. We kind of came down, filled the gap a little bit, and then there's the big move today. And you might be surprised with the depth of the sell-off that occurred today that the VIX didn't spike even higher. All we did was get up to 26, 25 and change where we closed. Would have thought we'd have been at 30 or higher on such an ugly day. So again, just like we talked about the volume being set up for the potential for more downside, so's the VIX. So it's hard to find the bullish scenario, I guess is what I'm trying to say for those of you that are looking for the market to go higher, at least for a little while. Now, I mentioned in the intro, interest rates actually went down today. Now, how would that happen with the Fed being so unbelievably hawkish? Well, money is moving into the bond market, right? When money moves into bonds, prices go up, yields and rates come down. So it's telling you money was leaving the equities market today and going into the bond market, and that's the reason that we moved back to the downside, offsetting what you would have thought was support for rates going higher from the speech. Now, you would think it would be supportive of the dollar, and it was. Take a look at this. If you're new to our channel or new to Elliott Wave Fibonacci stuff, just look at the dollar and how well Elliott Wave has forecast the movement in the dollar. First of all, right here we have this triangle, which is in a complex A wave of a really well-formed zigzag pattern. Right from the start of the wave 5, there's that completion of the complex A. It was complex because it had that corrective triangle in it. We come right down to a 61.8% B wave correction, and then we're moving higher from here. So it looks like, to complete that zigzag pattern, which appears likely with how well this has moved, that we're going to see a dollar up around 112 at least, maybe even higher. So breaking even above the top of this tap box, time and price projection within Elliott wave of where we may go. Now, of course, we've got to break this wave 5 high here that is a bit of a double top. But again, from the Fed's speech today, it seems like that's pretty likely that that's going to occur. Running through the markets, we'll go through these quickly because it's all going to be the same story with a day as ugly as today. You can see that with the Dow, we broke down below that major support resistance level of 330. We hadn't gapped through that one on Monday. We had held that level of 330 even with the ugliness on Monday. Bounced back up a bit, not quite up to as close to closing the gap as we were on the SPY, and then there's the big move lower today. Taking a look at volume though, look at that. We didn't even have average volume on the diamonds. That's kind of interesting, telling you that value may be a little bit more of a place to be moving forward. Well, let's look at the Qs. Talked about how an arena, if you will, or an environment of raising rates is never very good for tech stocks, and we had a nice bounce on the Qs, but that's pretty ugly today. You look at the moving averages below all the major moving averages as you would expect, but when we take a look at volume, dead on average volume, so similar to the SPY, meaning it wasn't a complete washout where everyone that wanted to sell sold and you could put in a temporary bottom. When you have just average volume, that means you're set up for more selling. Perhaps we try to bounce Monday, get above those 50-day moving averages, but I think if we do, any sort of a significant bounce from here is a good shorting attempt. Looking at the Russell here, right there at 190, good shorting opportunity is what I really meant to say. Bringing back down right to the 190 level. We've talked about this so many times that we had the levels between 190 and 210 at the start of the year. Then we broke down below that, and so we broke below 190, and starting in May, the new trading range was between 170 and 190. Well, we're right back down to 190, so what happens at the beginning of the week there? Let's not forget that the Russell is also in a qualified 5-wave impulse pattern to the downside with a perfect 50% correction level on the wave 4 there with a doji right there at the top of the 4. So it does look like that wave 5 is underway as well. Taking a look at Bitcoin, move lower as you would think with the ugliness in the market today. Just a really ugly tape across the board, and looks like we're coming down to test that 20,000 level, which is what we expected. We've been talking about this for the past couple of recordings, past couple of TradeFinders and insiders meetings that we have on Thursday night, and we had this really nice ascending triangle here that was forecasting a 4,000 point move, and we knew where it was going to go, right? It was pretty easy. If we broke to the upside, we were going to go test this 28,000 where there would be resistance from May and first part of June, and if we broke that, we're going to come back down and test the support at 20,000. That's where we are. The question will be, will 20,000 hold? So I've asked you a few times about your thoughts on Bitcoin, but I really like to know this time, will 20,000 hold? What do you think? Is it just a test of that level, we bounce again, or do we break and move lower than that? I'd like to know your thoughts. Got another one for you as we continue through. Thought we'd look at gold, wondering, was there a flight to safety today with all this news? Did the metals get a bid? Is it a place to go hide in gold? Nope. To the downside here as well, and that's just more of the inflation interest rate play than anything else. So there wasn't a panic move into gold, at least not yet. So it does look like we're coming down to test the 160 level here, and then we'll find out if we break below that, then we're probably in this wave 5 all the way down to below 150. So looking like a fairly bearish setup for GLD, but slight chance it could hold 160. If not, 150 is where we're going. Looking at Australia, now Australia had a pretty interesting chart here. They had broken above 22, which was a resistance area, and was tackling 23. Now, it had gone up and hit it in the middle of August, forming that wave 4, moved back down, and you can see the importance of breaking above 23 here, and the start of the day it did, and then succumbed to all the selling in the U.S. here, I think, and just headed back below it. So your levels are pretty easy here to view on the EWA and the Aussie. If you break below 22, then probably got confirmation of this wave 5, and we're going to come down below 19. If we can break above 23, we may have something going back to the upside here with this big, huge gap here. Our gaps got filled in the U.S. from this initial move lower in June, but they had not gotten filled yet in Australia, so we'll see how that plays out. And then China, an ugly day, but held its level at 35, which is interesting. So a little bit stronger than some of the other markets, you would have to say, with the fact that it's still there. Now, maybe that fails and we start to come back down, but we had put in a wave 5 bottom here, and we're bouncing. We bounced right back to that 61.8% level, so that tells you that you wait on the next impulse move. So we're right there, the 61.8% bounce. Again, we talked about that in Tuesday night's TradeFinder as well. So will we continue lower than this? If we break back below, I think you're probably safe until we break below this 38.2% corrective level. We break below that, then we may test that wave 5 low. I thought I would just go ahead and bring in the emerging markets since all the markets look so similar. So we'll just get a whole conglomeration here of the emerging markets via the EEM. And you can see that we had a wave 5 right at the 61.8% level. It had bounced back to the upside, but rolled over today as you would expect. But note that the 10, 30, and 50-day moving averages are all converging right about where we closed today. So maybe if the selling isn't so severe in the U.S. on the rest of the way down, there can be some sort of a bounce, a place to hide in the EEM. Can't say that yet, but the fact that we are at a little bit of a level of support here around 40, and we have all those major moving averages to add support. Perhaps there's a bounce again if the selling isn't so ugly in the U.S. But last night in our insiders meeting, we took a look at Tesla. This is the other question that I have for you. Where do you think Tesla goes from here post-split? And the question had come up last night of why was Tesla down yesterday post the split? Don't stocks usually go up after the split? And we talked about how, well, that's kind of the way it works when there's a 2-for-1 split. But for one thing, Tesla's already had a big split. And then you have another one that's 3-for-1. And people tend to sell some of those additional shares, especially when it's more than a 2-for-1. And you have to go through that absorption period of people selling off some of it, keeping some of their position, but selling off some of it. And so a little bit of downward movement is not unexpected. But we also noted that we had a really nice triangle formed here in Tesla, and so we were going to make some sort of a breakout. You don't try to pick a breakout of a triangle. It can go either direction, but it was pretty clear where the levels were. Break to the downside, we're probably going to label that wave 4 down around 260. Break to the upside, perhaps we go up and make another new wave 5 high around 340. Which way do we go? Well, as you would expect with today's movement, we broke to the downside out of that level, which brought the wave 5 over a little bit quicker here, which is kind of interesting that it moved the time frame of it, and it did label the wave 4. So it said, okay, it only took one day for it to tell us that it's a downside breakout, which means that we could have more follow through. But those of you that have been watching us before know that with triangles, one day doesn't mean anything. You have to have a second day, a follow-through, or confirmation day. Just because we labeled the wave 4 doesn't necessarily mean there'll be follow-through, but it's likely with the fact that we're breaking out of a triangle, just labeling the wave 4, that there may be further downside to come. But my other question for you is, what do you think about Tesla Again, it's not that ugly of a day considering everything, although post-split it probably felt pretty ugly if you're holding the shares. But could we still turn and move back to the upside? My question is, where do you think the next move is in Tesla? Do we continue lower? Do we come down towards that 260 level? Or do we turn and head back once a couple of selling days go through, absorbing the additional shares from the split? Be interested to know what you think. Hope you have a great weekend. Look forward to talking to you again next week. Take care, everybody. If you like these recordings, I'd like to invite you to join our new TradeFinder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.